Podcast Network Asia. First Metrosec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and First Metrosec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of First Metrosec. First Metrosec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
You are listening to First Metro Securities Philippine Stock Market Weekly Podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hello, good evening everyone. Magandang gabi po sa lahat. Thank you for spending your Thursday evening with us. So please type po C if clear po ako on your end, or type N if not clear. Type C sa chat box if clear po ako, or type N if not clear. Yon. There, I saw one feedback. So clear naman. Thank you so much. So our webinar tonight is so timely kasi May ngayon and we celebrate Mother's Day. Kaya First Metrosec together with our funds partner, First Metro Asset Management Inc. prepared a special FundsMart Learning Series entitled Investing with Love, a Mother's Guide to Investing. By the way, I am Monat Pangatungan, Visayas Business Development and Market Education Officer of First Metro Securities. It is the stock brokerage arm of the Metrobank Group. And our company is dedicated to promote financial literacy and create awareness on investment opportunities to empower individuals like you and even me and institutions to attain their financial goals. And we envision to be the largest and most trusted investment solutions partner. It is my honor and pleasure to serve as your host for this evening's event. And just like this event, we used to conduct our sessions on-site and face-to-face, but due to pandemic, we shifted to a webinar format. We are glad that we are continuously invited by public institutions, private institutions, and even academic institutions. That's on top of our monthly webinar series by First Metrosec. And as of year to date, we have conducted a total of 100 sessions already, both from personal finance to investment, market outlook, and market updates. And just to share, I have also conducted sessions specific for mothers. This was done in Cebu, and then the latest speaking engagement I had was with Filipino home-based moms there. So I would like to know the demographics of our attendees right now. So kindly click the link in our chat box that will be provided by our chat moderator so that you will be directed to slido.com, or you may visit slido.com and then enter the code 898581. 8988581. So kindly visit slido.com and then indicate the event code 8988581, or the link is already available in the chat box. Kindly just click the link so that I'll be able to know the demographics of our attendees for tonight. So for the first question, are you a mom or soon-to-be mom? Kindly indicate your answer. So we have already one answer. 3. Let's check. There are 4 answers already. Yeah. So going 5. Okay, so let's see. 6. May hahabol pa ba? Let me just check. Okay. So there. So 57% answered yes, and then 63% answered yes, 38% answered no. So based on this survey, majority sa ating mga attendees are mothers. And let's see the next question. How many children do you have? Is it 1, 2, or 3? So in my case, I have 2 children. I have my eldest daughter, and then my youngest one is my son. So 6 and 4 years old. So let's check with other attendees. Oh, 100%. So all of those mothers currently in our webinar have 2 children. So let's see. Can you share what are your family goals? So this applies both for non-expecting mom. What are your family goals? So tingnan natin. No? So personally ako, travel with family. So financial freedom. Any other answers? Okay, so 4 or 2 participants are still typing. Your international travel. Ayun. So education for kids and then increase finances. Oh, wow. All my kids have investment. Hold, I cannot see. Metro and AXA. Oh, thank you for sharing. There. And we still have 1 participant typing her answer. So I think that's it na. So education for of kids, international travel, same travels, both local and international, financial freedom, increased finances, and those kids that already have investment in Metro and AXA. So let's see next. So with all of these travels and rather goals, no, to help us achieve with our family goals and exploring how to invest with love, we figured it would be best to tag expert along. So we have Ms. Ruth Chaneco, currently a trainee manager at First Metro Asset Management Inc. She has 14 years of training and quality assurance experience in the financial services, investment, insurance, BPO industry, and she is a chartered wealth advisor as certified by the International Federation of Professional Managers, UK and Wealth Management Institute. She is a certified investment solicitor for mutual funds and a graduate of the Trust Operations and Investment Management course by the Trust Institute Foundation of the Philippines. She completed her BS Mathematics degree, minor in education at Polytechnic University of the Philippines, Manila. So let's all welcome to the virtual floor Miss Ruth Chaneco. Hi, Miss Ruth.
Hi, good afternoon. And can you see my screen now, Monette?
Yes. Yes, po.
Okay. Good afternoon, Monette, and thank you for the kind introduction. And to our moms, probably half of our participants are moms here, and to those who are probably soon to be moms or you're watching in behalf of your mom, good evening to you. Okay. And for today's session, I think we are going to take out the investing part and connect that with love. Okay. So a lot of us probably don't connect investing with love, but I will probably give you tips, but at the same time guide you on how to invest for your family, particularly your loved ones. So maybe you're asking, bakit hindi na lang ako mag-invest? I have extra money. Can I just go and invest? Okay. So for this session, we're going to walk you through how investing with love is better than just simply jumping into any investments. Okay. So again, my name is Ruth Chaneco, and I'm very thankful for being invited by First Metro Securities to discuss this and to also reach out to all our moms who are watching now. Okay. So things that we need to remember here is we have to think of who we are investing. And that's the first step, okay, into making sure that you are investing with love. So make a list of the people you love, okay? Make a list of all their names. So you can probably set goals for your entire family. I saw you indicating, you want to travel abroad, you want to also increase your finances. That could be a family goal. Okay. Next is you also need to think about you as the mom, your partner, your husband, as a separate individual, okay, that you are investing for. And I'm going to talk about that later on why you should be investing individually, okay? And then the next one is another, of course, is our kids. And I guess majority or probably all of our participants have two kids. I would also be included in that list. Okay. Now, we need to remember that each child is unique, and therefore, when it comes to investing, we also need to make a separate investment, or should we say separate set of goals for each of our child. Okay, so that's the first step with investing with love. Okay, so you think about who you love, and that will tell you who you are investing for. Okay, now let's move on. Okay, with the what. Okay, so second step is identifying what are your particular goals. I think the reason why also Moneth asked you about your goals earlier, because it makes your goals smart. Remember, for some of you probably are working in the corporate or who are familiar with writing your goals, it has to be smart. And what does that mean? It has to be specific. Okay, so when you say financial freedom, you have to define what is financial freedom for you. Because for some individuals, financial freedom is being able to live the life that they want without worrying about the cost or money. But for some, financial freedom could be a reduced living. Okay, so it's like living simply so that they don't have to worry about the cost. Okay? So you have to be really specific with that. Okay, so for some, I think you have mentioned also travels. Okay, and also some have mentioned about education, and another have pinpointed the increase in finances. So maybe when you write your what's, you can probably come up with specific goals, or you can also group them into themes. In this case, we showed you, I have three themes, and the reason why I only have three is because I have a lot of goals. Okay. That also applies for you. But sometimes when it comes to your finances, you'd be trimming them down to the top three. Okay. You need to prioritize because our finances are limited. Okay. And by the way, this is applicable whether you are a single income earner or you are a dual income household. Okay. So in our case, my top three goals would be we want to travel. Okay. It could be abroad in your case, or it could be local. Okay. And that is experience. It could be specific into the type of experiences other than travels that you want to specify. Okay. And the second one is enhanced living. So, how I define enhanced living is that when I grow old, I'm not going to rely to my kids, okay? And I want to have my own source of income so that my children, even if they're adults anymore, they don't need to worry about me and my partner, my husband, okay? When it comes to our expenses, so that they can focus on their own careers, okay? They can take up their masters, they can go abroad, study abroad, they can pursue whatever they want without the restriction of supporting their parents. Okay? So this for me is a continued goal for us to enhance our living. Okay? And then the third goal, which is a common theme, I guess, for all the moms and probably the dads who are also moms to their children who are here, is having or giving quality education to their children. Okay? Now, let's look at the timeline of achieving the goals. Okay, so when we say our goal should be smart, it also means time bound. Okay, you have to set a time on when you are planning, or when is your target time to achieve all of these goals. Okay, so it takes a little bit of for you to write down and decide. No, so it could be a specific year for you. It could be a number of years. It depends. Okay. So if you're planning to do an international travel on a yearly basis, okay? So you write that down. Yeah, we want to travel yearly, so it takes us 1 year to prepare for that. Now you have to set also how much is that international travel. So I guess you probably have an idea already, or you can also scout, look at websites, you look at Facebook pages for you to estimate your cost of international travel. Okay? Now let's assume that when it comes to education, your child is currently 8 years old. Okay, so in my case, my child is 7 years old. He'll be studying college. Okay, so I want him to go to a reputable school, okay, in 10 years. Okay, so that's my timeline. Okay, so study fund. And please note that in your case, you have 2 kids, so you will have 2 buckets. Okay, and the last one is enhanced living. So for me to achieve and give my children an enhanced living, I need to make sure that I have enough seed fund, nest egg upon my retirement, which is in 20 years. Okay. So I hope our moms here, and even not those that are watching in behalf of their moms, you are making a list already. Okay. So through this process, you can already start following the steps. Okay, so you have already written down who you love, who you are investing for, what are your goals for them. You choose top 3, okay, among all of those goals, and you set a time frame. Okay, so at this point, you already have an idea of which goals will happen first or which goals would require you to realize first and which goals will take time for it to happen. Okay? Now, what's the importance of the time bound? It helps us plan on how we're going to execute it. Okay? So, when it comes to planning on how to invest, you will now look at prices and also how much is your investable fund. Okay, so there are no perfect plans. You can probably devise a plan and say, well, it doesn't work. I'm going to revise it. Okay, and that is the purpose of our session this afternoon. So let's assume that your international travel, which is in 1 year, next year, would cost you 100,000. So say a family of 4, and could be just to Disneyland. I hope this is enough. Okay? And you're probably planning that to happen next year. So if you're going to save up for that for 12 months, so we just simply divide, diba, the 100,000 by 12 months, and that would be 8,000 per month. Okay? So now the question is, where are we going to invest or where are we going to put the 8,000 per month? Ba? So for some of you would say, I'm gonna put it in savings, okay? Kasi madaling kunin, okay? But in fact, you can also do that in a money market fund because this is like your enhanced savings account, okay? The only difference is that the income, okay, is non-taxable, okay? And at the same time, it is also used as a parking facility for other purposes, okay? So in my case, I also apply this one, but not for travels, but particularly for paying the tuition fees of my children for the following year. So this is where I park their tuition fees. Later, I will explain also to you why this can be a good avenue other than your savings, okay? Now, the next one is the study fund, okay? Education fund. So probably some have already said, I have an education fund for my child. They probably help you compute the estimate of the cost of tuition fees. Okay, so for this example, I'm going to teach you how we are going to compute how much should be your education fund. Okay, so this is an assumption that the child will go to college for 4 years and 2 semesters. And the tuition fee per sem is, let's just assume 100,000 for that particular school. Okay, so maybe you have already an idea kung anong school yung may ganong tuition fees. Okay, but that is in today's prices. Okay, so what do you think would be the cost of tuition fees 10 years from now? So that is the question that you're going to ask yourself. Okay? So yes, you're saving up for a tuition fee of 100,000 per sem. Probably that's 100 times 2, diba? And then times 4 years. Okay, so 2 sems times 4 years, that would be around 800,000. Okay? Now, factoring inflation. Of course, tuition fees are also affected by inflation. In fact, in the early 2000s, inflation rate was for the education is 10%. So you have to consider that, okay? But for me, I only factored in 3.5% of inflation here. Okay, because that's our current average inflation rate, okay, in the past 10 years. Okay. So instead of having 800,000 education fund, okay, for me to secure the tuition fees of my one child, I'm going to save up for 1 million pesos. Okay. So remember, this is the study fund. Okay. So this is the bucket for my child number one. My child number two, wala pa in this picture. Okay. Now, you probably are thinking, well, if I do that, I save up for that, you are going to need 8,000 per month. Diba? So at this point, you are already saving 8,000. Okay, so maybe I can pinpoint it there. Okay, 8,000 for your travel fund and then another 8,000 for your child's tuition fee. Okay? Now, here's a trick that I'm going to teach you also is where you put your money, okay? Where you put your study fund, the type of bucket that you choose would also affect how much you need to save or invest for that particular fund, okay? Now, here's a recommendation. So since this is a 10-year horizon, you don't need to save. In fact, what you need to do is to invest. I guess everyone agrees that for us to beat inflation, we need to invest. But the question is where? Okay, so I am discouraging you to invest in a money market fund or even a fixed income fund. Okay, because fixed income fund can probably be at par with inflation but not beat it. Okay, so instead, you can invest in equity-based funds or also balance funds. Okay, so why balance? Because it has a combination of stocks and also fixed income instruments. Okay, but what is a unique type of balance fund is a dynamic fund. Okay, so what is a dynamic fund? Its only difference is that it has no limit when it comes to how much or how many percentage can be allocated in an equity or fixed income asset. Okay, so the only opportunity here is to look at which type of asset class is benefiting on a certain economic condition. And that fund will invest in there. Okay. So I actually used a compounded annual growth rate here of, I believe it's 5%. So if with a 5%, you don't need to invest 8,000. In fact, you would just invest 6,400 per month to achieve the same value, which is 1 million pesos for the education fund of your child number one. Okay, so it also applies to your child number two. So Monette mentioned she has a 4-year-old. Now your 4-year-old, you have 14 years, okay, to invest for that child. So definitely lower than your 6,400. Okay. And the last one, so I want an enhanced living. My view is to have enough nest egg and retirement fund, okay, by the time that I retire. So let's assume that the retirement is in 20 years. Okay? And let's also assume that the cost of living would be around 30,000 pesos. Okay, so multiply that by 12, and then you multiply that by the number of years through the retirement life. Okay, so when we say retirement life, the average life expectancy in your case. Okay, so let's just assume it's also 20 years. Now, factoring inflation again, okay, so you might be wondering, oh, that would be around 30,000 times 12, diba? Let's assume it's around 600,000 pesos. Okay? Now, multiply that by 20. It's not the number that you are thinking because we need to factor in inflation. In fact, in my case, based on my computation, I need 15 million pesos as my nest egg. Okay, so mind you, this is the nest egg that already includes, if you're working in the corporate, okay, so it also includes your retirement benefit upon your retirement. So under the retirement pay law, okay, it will also include other income from the assets that you are going to build at this point. Okay. Now, if we're going to save for that retirement fund for 20 years, I actually needed 62,500. Okay. Now, what is our suggestion? Okay, so at this point, because this is 20 years down the road, we highly discourage, again, investing in fixed income funds. In fact, you can invest all of it in an equity fund. Okay, so there are many equity funds. There are passively managed equity funds. There are also actively managed equity funds. Okay, which we can discuss in a few slides. Okay, so currently the compounded annual growth rate is around 8%. Okay, so at an 8% growth rate, instead of saving 62,500, we just need to invest 25,500. Okay, so maybe at this point you're thinking, all right, that is how I'm going to invest for all my goals. Okay, but we also have to be realistic. Do you think this is a realistic number? Okay, so this is kind of like 18,000. So that's your 16,000 pesos. Okay, there you go. Plus your 25,500, which is roughly around 40K. Okay. Who has a surplus of 40K now? You might be wondering that as well. Okay, so we have to be realistic, okay, when it comes with our goals. Okay, so again, we have identified that our goals should be smart, specific. I know what kind of goals. It's measurable. I know how much I need to achieve and how much I need to invest. Okay, but is it achievable? Okay, is it realistic? That's the R there in the SMART. Okay, so you're probably asking, is this realistic? And that's where the financial planning comes in. Okay, when you say when you're investing with love, you are actually taking out the emotion. Okay, and you actually have to identify right now what is the most important and how can our finances work on these goals. Okay, so my suggestion to you is to just make a list of all these goals. Okay, and in fact, if you think about it, you can work on how much is your current surplus. Yan. So you might be thinking, let's assume you have received an increase of, let's assume your increase is 10,000 pesos. Okay, so this is your surplus. So among these ones, which is the most important? Okay, so you're probably saying, well, maybe we can defer our international travel to 2 years from now or 3 years from now. Okay, you can do that. Or you could say, I have an upcoming bonus this November. That's what I'm going to use for my international travel. Okay, so you could say, this one, I'll take that out from my bonus. Okay, so now I have 10,000 pesos. How am I going to budget that? Okay, so you can simply just budget 5,000 here. Okay, and then another 5,000 for your retirement fund. So simple as that. And there's no right or wrong answer here. You can probably start investing for your retirement because you probably see your kids with the potential of achieving academic scholarship. Okay, so maybe that could also be your strategy. It depends. Now, the lesson that I want to teach you here is the hows that we are teaching in financial planning is not a one size fits all. So you can tailor fit your own financial plan. And as a mom, I'm sure you still have other goals in mind other than what you're seeing on the screen now. Okay? So I hope the little bit of crunching the numbers help you, okay? And I hope it can also give you an opportunity. So the baseline for you after this session is to look at how much is your surplus. Okay? Surplus meaning your income as a family, if you're a dual income household, minus your expenses. Okay, so simple as that. And you do that on a monthly basis, or you can also do that on an annual basis. Okay, so now, oops, maybe I could delete all of these. There. Just to sum up, okay, so when it comes to short term investing, and for the short-term goals that you have, the most important thing that you want is to preserve the value of the money. Okay? And when we say preserve, inflation will not eat up the value. Okay, so you want to invest in an instrument that has a higher rate of return than the inflation. Okay, now if you are looking at, so I mentioned earlier that other than your savings, you can also invest it in a money market fund like the Save and Learn money market fund. Okay, now when it comes to goals that are 3 to 10 years from now, you can also look at equity-based funds, balance funds. Okay, so two things that we suggest at this point is that what you want to achieve here is to grow your money. Okay, because sometimes the type of goals that we need to achieve 10 years from now, 20 years from now are really the expensive ones. So it's the reason why we need to invest, because we have limited finances, we have limited surplus that is available. Okay, so what are the type of instruments that will help us achieve that goal by investing a little bit lower than how much we are required to save? Okay, so later on I will talk about these two type of funds. Okay, and the last one is, when you have 20 years and 30 years to prepare for something, then you want to be aggressive. You want to make sure that this type of instrument will be able to maximize the growth. Okay, and therefore, at this point, we advise to either look at the actively managed funds, or you can also look at thematic funds. Okay, but all of these are equity based. Okay, now, you probably have noticed, why am I using buckets? Okay, so it's not a wallet, it's a bucket. Okay, because our objective is to fill that bucket over time. Okay, so pupunuin natin yung bucket na yan. And when that time happens for us to, we need to achieve that particular goal already, we start taking out from that bucket. Okay, so we will not pour the entire contents of the bucket. We will take out from it slowly. Okay, so that's why I want to use that bucket analogy. So I want you to remember that when it comes to your investments, it's a bucket. You don't need to spill it over when you have achieved that particular dream already. So say for example, your child is going to college already. You don't need to withdraw the entire, say, 1 million pesos. Okay, you just take out the portion that you need and still allow the remaining to grow. Okay, so like for example earlier, let's say we have a 1 million education fund. Let's assume we have achieved 1 million, or we have achieved more, okay, than that. And their child goes to college, the tuition fee is, let's assume it's about 150,000. Okay, so you deduct the 150,000, or let's say 180,000. And now the remaining would be, okay, so you have about 820,000. Leaving that money in that instrument, okay, would still allow it to grow for a few years. Okay, so you don't need to take it out everything, okay, by the time that you have realized your goals. So that also applies to your retirement fund. Okay, so you will just start taking out from the bucket and not pour everything or take out everything. Okay, so for the moms, that is another strategy that we are also teaching here. Okay, so how are you going to manage all of these buckets once you have achieved your particular goals? Now, let me clear the drawings again. So, just for me to cover everything about the money market fund and why it's the best instrument for preservation of the value of your money. Again, it's not preservation of just capital, but the value. Okay, so it's short term. You actually would just invest for 7 days. Holding period is 7 days. Okay, but suggestion is to invest in at least a year. Okay, and how are we able to achieve that? Portion of our money market fund is invested in government securities, time deposits, and also corporate bonds. Okay, so what's in the Save and Learn money market fund? So you can see here, 4 out of our top 5 are government securities, and then you have a corporate bond there. And these are all the coupons, which we probably would think if we invest in a savings instrument, we won't be able to achieve this kind of interest rate. Okay, so still, as an instrument, it is a conservative instrument, okay, but allows us to generate more than the inflation. And lastly, I mentioned that this could be a parking facility not only for your travel fund. Okay, so you can also use it as a facility. Let's say you're waiting for an investment opportunity in the market. This could also be something that you can use. Okay. Now, let's look at. So what you're seeing here, the orange line, that's the net asset value per share. That's a movement of your money market fund. Okay. So this is the movement of your travel fund. Okay. So you don't want your travel fund to be very volatile. Okay. So that's the reason why we always teach when people ask us, saan kami dapat mag-invest? Ano ba yung magandang investment instrument? Okay. We don't answer right away. We always ask you, what are you investing for? Okay. What, whom? Okay. And when are you going to realize? It's like asking, how long are you willing to wait? How long are you willing to part with your money? Okay, that's the question. So if you say it's 1 year or less, then we definitely recommend invest in the money market fund. Okay. All right. And then the second fund that I mentioned earlier is in growing your funds. We advise the Save and Learn Focus Dynamic Fund. Okay, from the term dynamic, it allows the fund manager to invest both in fixed income and also equity securities while making sure taking profits on the asset class that will have a benefit, okay, on a certain condition in the economy. Okay, so if they see that they would be more aggressive into stocks, okay, they would put more in that. Okay, so the last few months, we have probably invested 90% in the equities, but right now we are investing about 65% in the equities for the Focus Dynamic Fund. And the rest are invested in corp bonds, okay, and also other fixed income instruments. Okay. So something that I also want you to focus here is that this is currently heavy in the financial side, like Metrobank. Okay, for one, it's because in this, probably you have watched, okay, some of the series of webinars that in this economic condition, it's also good to invest in the financials. Okay. Now, where are we invested? So I mentioned Metro Bank, okay, the other financials that you see there, and you also have in the holding firms and services. Okay. Now, it's tactical because it can overweight on certain financials. It can also overweight on certain asset class, and it's flexible. Okay? So you see how it immediately shifts the asset class, okay, depending on what is happening in the economy, what's happening in the stock market or in the fixed income market. Okay? So I hope I gave light about what the Save and Learn Focus Dynamic Fund is and how it can help you grow the value of your money to achieve your long-term goals. Okay? So there you go. I guess this is the last slide for the fund. This is just the movement of the NAV PS because it is equity laced. Expect that it is also volatile, similar to your Philippine Stock Exchange Index. However, it sometimes would be able to outperform the stock market, just as how you see it on the screen. All right, so there you go. Now, I think Monette also have mentioned that our participants would also want to know how we're going to navigate your mutual fund investments when there are life changes. Okay, so before I talk about that, I want everyone to walk you through yourselves, okay, your moms through your journey as a mom. Okay, so you remember, no, when you were a new mom, you tried to read some of the books, probably you watch YouTube videos before your child comes in. But when the baby comes in, you wish that you have watched more videos, okay, you have read a lot of books, and there are a lot of people giving you tips, suggestions, and it's really hard to focus which to get. Okay. So, and that's why it's okay. Okay. Sometimes we make mistakes, we learn through the process. Ba? So that's as a new mom. Now, let's say you have another child, which majority of our participants here have 2 kids. So you are a new mom again, but you're not a newbie anymore. Okay, so you are carrying some of the experiences that you learned with your first child. Okay, and therefore you take that best practice and try to avoid the mishaps, okay, or the mistakes. And then Now your kids have grown into kids. You have more time to yourself, unlike when you are a new mom and you are a new mom again. And this allows you to learn more experiences, to look at the other factors, okay, as you grow and raise your children. And the last stage, I'm not sure we have asked the ages here, but at some point we would be mom of moms, okay, or a mom of our daughter-in-laws, okay? So this makes you a little bit of a pro because you've been there, okay? Now, what is the purpose of this analogy? The stages of being a mom allows us to also experience different life stages and also view it differently based on our experience. So all of it that you're seeing here would be your journey as an individual. Okay, so not just as a mom, but as an individual. And all of these dips are what we call expense events. Okay, getting a car, having your first child, having your second child, acquiring a new house, your children going to school, to college, all of these are expense events. And the reason why we try to pinpoint all of these expense events is that you take the opportunity now to build your wealth, to build your assets, to prepare you for all of these expense events. So you create we call this income opportunities. Okay, these are all the income opportunities here. Okay, so that you are prepared to all of these expense events. Okay, so I hope that makes sense. Now, how are we going to do that as mom? So I use this analogy again. And as an investor, being a new mom is also like being a newbie in investment. Okay, so you really have to practice that. You really have to keep on investing to learn more, attending webinars, attending seminars like this, okay, reading up, watching market updates, okay, for us to get acquainted with what is happening in the economy and how we should move forward with our investments, okay? Now, as a move up mom, you can now start discovering, what are the other instruments available there that would be able to help me achieve my goals. And it doesn't necessarily be focusing on a single instrument, a single type of fund. Okay. When you become experienced investor and having a brokerage account, this now gives you opportunities to look at what are the opportunities that I can take over the short term. Okay. So what are these instruments that would be available for me and I can use also to achieve my goals for a shorter period. Okay, so these are all the investor profiles that you can look at, and these are the type of instruments that we recommend. So, as a newbie, because you're not yet acquainted with all of the tools, with the type of investment analysis that you need to perform in choosing the investments, you can invest in mutual funds because the investment analysis, the research has been done already by the fund manager. Okay, and this is a type of fund that you also want to invest in. So just like your child, okay, so this is a type of instrument that when they grow up, you can leave them, okay? They can become more independent even if they're still young, okay? Now, when you have more experiences when it comes to investing, then you can look at discovering also the theme mutual funds or managed funds, which include in my example earlier, First Match Consumer Fund, but these are the types of sector funds. Okay, so they have a focus sector, which means they will be able to generate a different set of income that is separate or different. Okay, as compared to your funds that is invested in the PSEI, okay, or in certain indices. Okay, so as an experienced investor, you probably would start looking at trading, okay, buying and selling securities, and this will also be investing in a fixed exchange traded funds like FMETF allows you to have that mutual fund component and also stock trading experience, okay, or stock buying and selling of stock experience, okay. And lastly, being a mom of mom, you're a pro. You probably would be coaching when it comes to investing, and you have already looked at not only what we are discussing here, but what are the other investment opportunities that you can take on. Okay, so that's how you navigate when it comes to investing. You shift as you learn. Okay, now what are the significant life changes that you need to remember. I think I have illustrated this earlier. I only put it or trim it down into two. We have the what we call income opportunities. And the last one, the second one is the expense opportunity. And as I mentioned earlier, no, you look at your income opportunity again as a way for you to build your fund so that when this happens or when your children have achieved their milestones, they go to college, okay, you are prepared for that. Okay. And you will still be able to achieve that through investing in mutual funds. Okay. So one of the tips also that we share is that if you're an employee, every time that your income increases, consider putting a portion of your income on a regular basis into your retirement fund. So adding to your retirement bucket. All right. Ayan. So some of the things that I also want to note, some of the biggest expense events would be the loss of income. Okay, especially if you're a single income family, you have to also be prepared for that. If you're a dual income family, that's good. Okay, because the loss of income of one may have a lesser impact. Okay, as compared to the loss of income in a single income household. Okay, now I want to end my presentation, okay, with this one. So when you are considering financial planning, you have to understand that financial planning is dynamic and it's like love. Diba? So we don't end by simply giving. Diba? So we could keep on giving, we keep on giving. And when it comes to our finances, we need to make sure that before we get on to any investments, we need to assess. We need to do what we have done earlier. Okay, the who, the what, the when, and the how. Okay, and then that's you how you are going to plan and you execute. Okay, so it's good to plan, but you need to make sure that after this session, you start investing, okay, in whatever instruments that you have identified that is best for you or your particular goal. Okay, you also have to make sure that when you invest, you learn about that instrument. Okay, so that's execution. It's like, as I mentioned earlier, you need to get on to be a new mom, to be a newbie, so that when you gain all of these experiences, you become a move up mom, okay? Or you become an experienced mom and eventually you become a pro mom. Okay, and lastly, monitor. I believe we say you put your money in the mutual funds and forget it, yes, but there's a time for you to assess, especially if you are nearing your target. Okay, so let's say it could be 2 years before your child goes to college. Okay, it could be 5 years before you retire. You start moving your bucket into a safer, okay, or a bucket like the money market fund. All right. So again, that's our investing with love for our moms. Okay. So investing with love means dynamic investing. Okay. So there you go. Thank you very much, Manette.
Thank you so much, Miss Ruth. Thank you for clearly sharing the investing with love and the specific how, what, when, and also as well as the how to navigate your investment whenever we transfer to different life stages. So I know the audience have questions already in mind. So please indicate it in the Q&A of the Zoom panel while Miss Ruth will be on a water break. So how will you be able to invest in FAMI? No? Since we have Miss Ruth deliberately discussed the different FAMI funds earlier that matches the different goals, the family goals. So first of all, you need to access your First MetroSec account via firstmetrosec.com.ph or with a pro access. So as long as it's on website. Afterwards, just click funds on the upper right portion of the website. And next is if it's the first time that you actually access the funds tab, you need to update your risk profile. So after updating your risk profile, just click FundsMart. So it will show 131 funds, both UITF and mutual fund. Just indicate or sort it in the all providers and search First Metro Asset Management Inc. so that it will show the 8 funds available. And for you to better appreciate each of the funds, you can actually check the performance and then check it based on the highest performing fund, either in the past few years, 3 years, 5 years, or 1 year, or even year to date. And you can also check based on the fee structure. And if you have been decided on a certain fund, you wanted to know more about the fund, just click the fund, the ticker code or the code of the fund so that it will prompt to the fund profile. And once you have been decided that you want to invest in that fund, just click subscribe and indicate the amount that you want to invest. So afterwards, a day or two, it will be posted on your portfolio. So this is where you can see your invested funds. So depending on the fund that you will avail, so turnaround time varies as well. So another benefit of investing in pooled funds through FundsMart is that you make the most of your money because you will be paying zero. That means zero sales load, zero commission, and walang transaction charges. So these costs are always standard when you actually buy direct from the source. But you can actually maximize your investment opportunity when you invest in FundsMart. So again, that's a big reason to start investing through First Metrosec FundsMart. And you may also consider another strategy, which is peso cost averaging strategy, wherein you constantly invest monthly. So it may sound easy to execute, but it's very challenging to maintain the discipline that you can consistently and constantly invest. So save yourself from the time and effort. You just need to enroll in our voluntary investment program. So to get started, you just need to decide on 3 things. The first one is how much you will invest. So minimum of 1,500 pesos. Second, how frequent. So it's either once or twice a month. And third is where to invest. So just fund your account regularly and the amount will be deducted automatically from your buying power on the debit date. So your one-stop shop from your all investment needs from stocks, REITs, ETF, bonds, and mutual funds through our FundsMart. And for your reference, you can open a First Metrosec account when you visit our website at www.firstmetrosec.com.ph, or you may scan the QR code so that you can download First Metrosec Go application. You accomplish all the forms and upload the necessary documents. And when you are asked, where did you know about us? Kindly indicate the seminar code FAMI. So I am sharing to you the account opening video for your reference.
Trading on the go? Here's First Metrosec Go for you. Easily open your account today with this app. You can download the First Metrosec Go app through Play Store or App Store for free. If you already have it on your device, simply open the app and click Sign Up Now. Next, you need to create a user ID, read and agree to the terms, and provide these information. Once you're done, click the link on the email verification sent. Now, let's complete your account application. First, input your account information. Then, provide your user information. Next, accomplish the investor profile form. Almost there. Read and agree to the terms and conditions. Then click Agree. You will then receive your reference number through the app. Don't forget to save this number because you will need it for your initial deposit. Next, upload or take a photo of these requirements. one valid ID, 3 signatures on a piece of white paper, proof of address, and proof of bank account. If you're self-employed, there are additional requirements. Now let's fund your account. You can make your initial deposit through bills payment, online fund transfer, over-the-counter deposit, or remittance. The minimum 5,000 pesos or 100 US dollars can be used to invest in stocks, funds, and bonds. There is no maintaining balance required. Next, you will need to verify your identity. Simply take a photo of your ID and take a selfie. You're all set. An email confirmation will be sent to you in 2 to 3 business days. Happy trading! For more information, visit our help center at help.firstmetrosec.com.ph.
So that's how easy you open a First MetroSec account. And feel free to connect with us in our social media channels. Just search at First MetroSec, or you may scan the QR code. We are on Facebook, Twitter, Instagram, Spotify, and YouTube. And I would also like to invite you for our succeeding webinars. That's on next week, May 14, May 15, 16, 22, and 29. And then a registration link will be provided by our chat moderator in the chat box. And lastly, for our customized, gamified, award-winning market education programs exclusively designed for your company, school, or organization, just send us a formal invite at marketeducation@firstmetrosec.com.ph. So at this juncture, I once again call Ms. Ruth so that you can answer the questions. So for the first question here, how do you balance emotional investment or investing with love in making sound financial decisions?
Thank you, Monette. I guess we have learned earlier in the slides that we showed, okay, that when you have listed down all of these goals, you know what you are investing for. Okay, so you are already taking out the emotion in the investing because you have outlined the particular destination for that particular money that you are setting aside. So when a particular event happens, you still set aside that amount of money. Okay, so say for example, you probably saw an important thing that you want to buy for the family. So one of the examples there is you want to celebrate a birthday, okay, and you want to splurge on that, and you say, well, I can probably take that out from my child's bucket, okay, my child's education fund. Okay, so being emotional would mean you're going to take that money out. Okay, so again, when you have made a list of specific goals, the time, how much of that, you take out the emotion in the investing. You become rational, okay, and that helps you make successful decisions.
Okay, so stick with the set goals in mind. Now, so next question. What resources have you found helpful in learning about investing as a mom?
Well, because this is more on personal finance, I like reading the book of, there's one from Sir Efrain Cruz, Behavioral Finance, okay? And I also like to read books of Randall Chongson, okay, on personal finance. So all of these are speakers. I also like to watch YouTube videos also. Renzi Biolena, and he's also one. And I attended several training sessions. Okay, so for me to apply it personally. Okay, so really attending webinars and training sessions will give you insights about this one. So because I'm a visual and an auditory learner, but if you like reading, you can actually read books. You can also go to Facebook pages. Make sure that it's legitimate. Okay, so I would really suggest to go to the legitimate investment companies like FAMI, First Metro Securities, and not go into the fake, okay? Because right now, a lot of people are getting insights actually from scams, okay? So one of the things that you need to watch on is also, how am I going to spot scams from the legitimate ones, okay? So I mentioned some of the names, but I would really suggest go to the legitimate financial institutions.
Yes, I agree. And to add, I also like Spotify so that while doing household chores, I can still listen or develop something about personal finances and investment. And then last question, Ms. Ruth, with all the significant life changes or the different life stages, how do you prepare for this? Or aren't this overwhelming on your end? Or even for me, it's overwhelming.
It is. Okay. So when we tried to crunch the numbers, okay, and I've been practicing this one. So in all of our sessions, we try to crunch the numbers depending on their type of goal, how long they're investing for something, and the numbers always change. Okay. So there's no constant numbers when it comes to preparing the finances. But one thing is constant is that how much of your income is left for you to invest. So when we think about all of these goals and they are overwhelming, I want you to just go back. How much is your surplus now? And work on how you're going to budget that. Okay? So I forgot to add it in the presentation, but you can also just go to financial calculators and make an estimate. If I invest, let's say, a regular 5,000 pesos in this instrument, let's say it's at 5%, how much would it grow after 10 years? Okay, so you can have at least a value of how much would that money would grow by a certain period. Okay, so it also will lessen, okay, will at least take out no the overwhelming aspect of the financial planning because you're just budgeting, okay, what you currently have. Now, when you realize that, okay, let's say you are investing 5,000, after 10 years, it has grown to this much amount. And then you would say, well, it's not enough for my child's education. Or it will not be enough for my retirement. And that's when you will realize that either you cut down on your expenses now or you increase your income. Okay? So that's another process that you would look at. Okay? So either you wait for that opportunity or when that opportunity happens, you increase how much you are investing for you and for your family's goals. Okay? So it becomes less overwhelming. Okay? We just go back to I am going to invest whatever I have. But you are very particular with where, what you are investing for, and also how long you're willing to stay invested for that particular goal. So I guess it gives you a shortcut, okay, when it comes to the investing on it.
So it goes back to what, when, where, and how. So thank you so much, Ms. Ruth. That sums up our Q&A portion. Thank you so much for all of your questions, guys. And of course, thank you very much to our guest speaker, Ms. Ruth, for gamely answering those questions. And to our attendees, we also value your feedback. You can share your thoughts and experiences with us by scanning the QR code and answer our feedback form. So link will also be provided by our chat moderator. Your input is essential in helping us improve our services and better meet your needs. So we appreciate your contribution and we look forward to implementing positive changes based on your valuable feedback. Again, thank you so much, Ms. Ruth, and we'll look forward to our next collaboration as we continue to serve the Filipino investors. So perhaps you have some parting words for our audience before we formally close this event.
All right. I kind of forgot. I guess I just want to emphasize that since financial planning is dynamic, we always think about our families, right? Like, what should I buy for my son? What should I buy for my partner? And with all of these, we say overwhelming, and all of the goals that we need to achieve, we kind of forget ourselves, right? We forget ourselves that we actually should be one of those who are in your loved ones list, di ba? The who. Because you also need to love yourself. And therefore, you need to be investing for yourself. Okay? And when you start investing for yourself, you realize that you are more valuable. And it allows you to also look at when I increase my income, when I have more opportunities, I also increase how much I would be paying myself. I pay myself as a mom. I'm paying myself as the finance manager of the family. Okay? So and I'm paying myself for everything that I do for the family. Okay? And it's not really taking out the money, it's just putting it in a bucket that someday I would be able to take out, okay, for my retirement or for other purposes, okay, when that time comes. So I guess just make sure that just like love is dynamic, but also love should also be not only centered to your family, but also to yourselves. So there, thank you, Manel.
Thank you, Ms. Ruth. So there you have it, guys. Self-love. Once again, on behalf of First Metro Securities Brokerage Corporation, I would like to express my deepest gratitude to Miss Ruth of First Metro Asset Management Inc. for gracing us with her time and presence. So it is truly an evening well spent. Thank you also to everyone who attended tonight. We sincerely hope you learned a lot and that these insights and lessons will make your investment journey not just more profitable, but also more enjoyable. So please don't forget to provide feedback for today's webinar. And we hope to see you again in our future learning events because over here at First Metro Securities, we put your future first. Have a great evening, everyone. Bye, Miss Ruth.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.